Well, thank you, Sheena. Why don't we get started? Yeah, I'll let everybody know today. Thank you for letting me know. Okay. Well, happy Aloha Friday, everybody. Hope everybody had a great week. These weeks are going by faster and faster. I can't believe, like, feels like yesterday we were talking about today's deal. But why don't we just jump right into it, because I think there's a lot to cover today. So any leads, needs, good deeds to share? Any deals on the line right now that someone needs help navigating, structuring, or anyone that needs money? I see Raphael.
Hello, everyone. Just wanted to reintroduce myself. If anyone is looking into the Arizona MSA or for multifamily, I'm just starting to learn with fiance, so just jumping on board in the multifamily space. So if anybody wants to connect, I'll put my email. Thank you.
Awesome. Are you in Arizona?
I'm currently in LA County, south of LAX, the Torrance area.
Oh, yeah. Nice. Okay. Um, so Arizona multifamily, do you have anything that you're looking at right now?
Just literally just starting, but wanting to connect with and network with people in that area.
Nice. Okay. What area in Arizona again?
Like Phoenix, Tucson.
Okay.
Yeah,
Phoenix.
outskirts of Phoenix.
Okay, perfect. Yep. I wonder how the market is out there, because last time when the market turned, land in Phoenix like literally went to zero. You know, like there's some areas where it went to zero. So I wonder what it's looking like now. But if anybody's in the Arizona market and can maybe link up with Raphael, please do so. I don't know if you want to leave your contact in the chat, Raphael, but
Will do. Yeah.
Yep.
Thank you all.
Alex, who he's busy right now. He usually comes on the call, but he knows a lot of people in Arizona, Phoenix and Scottsdale. So I'll make sure that I'll ask him too. Perfect. Anybody else? Anyone else got anything? Okay. All right, why don't we just jump into just some news I want to share with you guys is in the private lending space where the money is flowing, there's a lot of action going on, and it's really not good. There's a lot of companies, like we've been talking about over the last few weeks, who are closing their doors or having to close their doors. So and it's only getting worse, it seems. So leverages are dropping. The guys who have been doing 90% of purchase price are no longer able to go up to 90, and that's us included. So the highest we can go is 85. It looks like everyone is dropping their leverages like around 5 to 10% across the board on their LTP, so loan to purchase price or loan to land value. And then rates are going up, some anywhere from 1 to 2.5%. It's going up. And the reason why this is happening again is because the institutional buyers, like some of them are Goldman Sachs, Blackstone, all the big banks, some of the big private equity groups and hedge funds that we haven't heard of but control a lot of money. They are no longer really in the game anymore. So hard money is starting to now become what hard money used to be, which was all private money, not institutional capital. So I'm not sure how much this is going to change, but like I said before, when I first started, which was only my first hard money loan, I believe, was in like 2014, 15-ish. And it was right before the industry got institutionalized. but the rates that they would give was 15% 3 points. And that's if you had experience, so anywhere from 15 to 18%. And not only that, but they wouldn't fund 90% of the purchase price. So it was like 65 to 75%, right? So we've been lucky the last few years to be on this bull run with the market and having all of the big institutional investors in our space providing a lot of liquidity. Now it's very scarce. The no buyers are crunching their credit boxes. So before, in the last few weeks, I was kind of just, giving updates and like, hey, we should be starting to look at changing our criteria if we're buying, because, things are changing. We don't know where we're going to be in 6 months. Now, my message to everybody is like, we have to change our criteria now, because not just because we want to be conservative, it's just because you might not even be able to get your deal financed if if you're not buying deep enough. And we have to remember where we are in the market cycle, right? If we go back to the fundamentals, we have to know where we are in the market cycle and where we have leverage. So if you're flipping houses, then the leverage before was on the back end, because for a majority of us across the nation, we were in a strong seller's market for years. Okay, so we had the leverage on the back end if you're flipping houses or building. Now, as things start to change and we're switching more towards a buyer's market, then we have to understand that we're not going to have the leverage on the back end. So we need to take advantage of the leverage we have on the front end. Right. So not only do we have to adjust our criteria to get our deal financed, but we have to adjust our criteria because we're not going to have the leverage on the back end. We might be squeezed on the back end. Right. So depending on what market you're in, I would look at how much did your local market where you're investing appreciate during the year of 2021. Okay, see how much property, how much of that was, how much it went up percentage wise, and then you decide how much you want to bring your ARVs down, right? So, because if you're gonna be flipping houses and you're buying something right now, looking at comps right now, you're looking at comps from the boom, right? So 6 months from now, those comps might be worthless. Those comps might be dangerous, actually. So if you know that your market went up 20%, and we know that a good amount of that appreciation was inflated, then maybe we should cut our ARVs based off the comps that are showing right now, and the ARV that's showing right now, maybe we have to cut it by 10%. So if you have an ARV of $1 million, maybe it's 900,000 that you're running with now, and you make your offer based off of 900,000. And not just that, when you're running your numbers, maybe you have to add on 2 to 3 more months in holding time, because you're not going to have the leverage on the back end. If your exit strategy is to sell, then we should adjust for the potential extra holding time on the back end. And we already adjusted for the price reductions, right? We dropped it 100 grand, 10% of which is half of the appreciation in this given example. So hopefully that makes sense to everybody. I just want everybody to be careful out there. The market is moving, and it's moving fast. And we have to remember that although Wall Street was in our space, and they still are, just not as much as they were like a month ago, we have to remember that we keep eyes on the capital markets, the Wall Street, but we also invest. We're Main Street too, and sometimes they don't run in parallel, right? Now that the institutional buyers are kind of out of our space a little, or at least kind of sitting on the sidelines, now it's kind of open for everybody, but you have to be on the right side of it, right? And what is the right side of any kind of wealth transfer or market correction or market downturn or upturn? it's making sure you have the right resources. And the right resources in our space, in most spaces, or most industries, is cash. Okay. So there's cash is king and cash is trash. There's like two, and like which one is right? Right. And well, they're both right, in my opinion, because in times where there's opportunity and there's low liquidity, like right now, cash is definitely king, but if you have cash and you're sitting on cash and it's just sitting in the bank account, then it's pretty much trash. So I think both is true, right? So today, what I wanted to share with you guys, I only have like 5 slides, is to focus on a few principles that I use when I'm raising private capital. And even when I say raising private capital, I feel it does it a disservice for what we actually do when we're raising private capital. Because really, I don't go out and raise private capital. I don't have some sort of like schedule where I go and present and pitch, people or investors or institutions. I don't do that. I typically will raise money from people who already know me, right? And I'll make phone calls, or I'll invite them out for lunches or something, right? Or meetings. So I wanted to share though that, like, how does that process work out and what do I focus on? Because I think after watching a lot of other investors, like I see where some people are running into problems with raising money. Okay, so let me share my screen. Let's see here. Let me get this right. Here we go. And boom. Okay. So please forgive me, because like these slides are probably pretty boring. I figure, I'm not here to sell like the sexy PowerPoints and a dream here. I'm just trying to give value, right? So from day one, this Coffee Talk call was birthed out of COVID and the uncertainty that came along with those times, which I feel like we're kind of heading into again. So it's good. We kind of got like the warm up 2 years ago. But it was the biggest blessing because I met some of the greatest people, and many who are still on these calls today. And so the purpose of the call was always to just give value, have fun, talk story with our colleagues, and then, pick each other's brains. And I feel like if there's one thing that I'm pretty good at is being able to talk about what we do and give value to whoever it is. So when we're raising private money, right, we have to think in the shoes of the person who's sitting across the table with us and try to get on the same side of the table as them, right? But first, before that conversation even happens, we have to take like the top-down approach and what we call the 30,000-foot view. Okay, so first we have to understand our current market and industry conditions. There probably isn't a better example than our current market and industry conditions today. All right, so the reason why we have to understand that is because we have to know where we fit into the ecosystem. So where does our value that we have to bring to the marketplace and to the industry fit? So when I'm looking at this, I see our value as real estate investors, okay, to the marketplace and to our industry. Our value is education and offering up opportunity. Okay, so how does this relate to raising capital? I'll tie this in as we go, but it's very important to know the value that you bring to the market or any business that you're in, okay? Because the fundamentals of investing come down to 2 questions, okay? And this is investing in any asset or anything, any business, it comes down to two fundamental questions, which are what's my risk and what's my return? Okay. And then it's up to you to decide, or your investor or your private lender to decide, is the return worth the risk? If it is, then pull the trigger, right? So now, when we address the question, what's my risk? When it comes to sitting in front of somebody and talking about investing as a private lender in real estate so that you can buy more houses, fix up more houses, and flip them or hold that, refinance them out and hold it. We want to address the elephant in the room, which are these two questions. So we can chit chat the whole time all we want, but at the end of the day, if we don't answer these two questions for them, then no business is going to happen. Okay. So let's address what's my risk. So there's risk in any investment, right? Even real estate, even as a private lender. So nothing is 100% guaranteed in investing. Okay. So, and we can never promise that, but are there riskier investments? Absolutely. Right. So when investors invest with us, they get a promissory note and a mortgage that secures their funds against the asset. Let's say we're flipping a house, right? So those two documents will secure their funds against the house that we're flipping. The house that we're flipping is now, they have a collateral, a position in for that property to be collateral. Okay. Then the other two documents that we get are property insurance and title insurance, which secures the asset to which their funds are collateralized on. Okay, so what's my risk? Well, there's risk in any investment or any venture, but in real estate, you get security, a lien position, collateral in a tangible asset. Okay, so now that's just the basic security that we give, but there's also security in more tangible way or intangible ways, like direct access to and contact to the principals or the sponsors or the people who are making the decisions, right? Now let's compare, let's say you give your money to a stock, like a brokerage to manage your money. Their job is to get you a return on investment, right? So let's say you give them your money, they put your money in a bunch of tech stocks or, a bunch of different companies. They diversify, right? That's most people's portfolios. They ride the capital markets and they think that that's safe, right? And I think we're finding out over the last few years how volatile the market can be and how safe, and how risky it can be as well. There's a lot of people who lost money in the GameStop and AMC, the whole Wall Street bets, bull run. There's a lot of people that lost money in there. Why? Because they don't understand the fundamentals of investing. Okay, that's trading. It's pretty much gambling, right? There's a difference. Okay, so when we invest in real estate, when your private lender invests with you to buy property, they have direct access to you, or I hope they do. Whereas if your money's in with Tesla and Amazon, and the chances are, one, you're not in the boardroom with the decision makers, knowing which way the company is going, knowing truly how healthy the company is and how healthy it's being run, right? And you probably don't have Jeff Bezos's phone number. You don't have Elon Musk's phone number, right? So like there's added security when your money is with someone who you can pick up the phone or go to their house and knock on their door. All of my investors know where I live. They have my phone number. They know where our office is. We're not going anywhere, right? So that's added security too. when you look at what's my return, right? Well, we offer, that's pretty simple. I mean, private lenders get paid anywhere from 8 to 12% interest annually. Now, for me, the way I approach raising capital and doing what we do, I pay at the top of the market. And that's not even a question. There's no negotiating on that. I pay on the top. Why? Because our investors are the lifeline of our business, especially if you're flipping houses, because there's no cash flow when you flip houses. Okay. All you do is bleed until the very end. And you need your investors to be in there with you, right? And trusting you. So we want to pay them the best, or I do. Okay. And I suggest you guys consider that too. It's nobody likes to work with someone who pinches pennies. I want my investors to make a lot of money. Okay, so what's my return? We pay 12%, right? Doesn't mean that everyone has to, but we pay at the top of the market. Now, you can also offer monthly payments. And I'm going to tell everybody right now, the best advice I ever got was from Leonard Rosen, who's one of our mentors. And the advice was pay your investors monthly. That at the time was something that just went right over my head, because paying your investors monthly is a lot of work. You have to have, a system set up for that, right? You have to have bookkeeping, accounting for that. But it was the best advice because when you pay your investors monthly, your investors every month, it's a reminder that their money is working for them, so that they perhaps want to help spread the opportunity and get more of their friends to invest with you as well. Okay, because what we do have to offer is a lot of value, right? Remember, we have to understand and know our value, which we're going to get to. So let me circle back. So if the fundamentals of investing come down to these two questions, what's my risk and what's my return, then our goal is, or my goal when I sit down with anyone who wants to talk about investing with us, my goal is to answer these two questions for them before they even have to ask. Okay. So I want to talk about how there's no risk-free investment, right? And that if you're looking for 100% risk-free investment, this isn't it, right? We want to be honest, okay? Which I'm going to get to why we have to be honest and genuine. So we understand that we provide much more security in a tangible asset, right? Because if your money is in the stock market and it's all in there, whether it's diversified or not, if the market starts to go down, which it has, as we've seen, you gotta hope and pray it's gonna come back, and you hold on, and the market's gonna come back, and your investment's gonna recover. Or you just gotta cut your losses, right? There's no security, there's no collateral in the market. Okay, so a 401k is not risk-free. If anything, that's probably the most risky investment out there being sold out there right now. Okay, so the returns that we offer at 12%, that's exponentially higher than most traditional investment vehicles available with the type of security that is offered, which is collateral in a tangible asset, right? So when we're talking about what we do, our job is to answer these two questions, hopefully before they even have to ask, so we can save that energy for real questions of diving into like, okay, so can we look at the draft of the promissory note and the draft of the mortgage? Can we talk to our attorney? Let's get these basic questions out of the way, because we know that this is a no-brainer, right? What we have to offer is a no-brainer. Okay, so the biggest thing that we have to offer and the value that we offer is education and opportunity, right? So we have to hang on to those two are those two values that we're giving here, because when you sit down with someone who's interested in investing with you, we are giving them education. There's no reason to sell. Okay, if you feel like you're selling them or you're in sell mode, then you're doing it wrong, and stop. Okay, because it should never feel like you're selling somebody on investing with you, because if we truly understand that investing, the fundamentals of investing come down to what's my risk and what's my return. And if we have a much more secure and less risky investment opportunity, and that provides exponentially more returns, then we win on both angles. So there's no reason to sell. We just have to educate. Okay, that's the value we're giving them. Whether they want it or not, they're gonna be educated by the time they leave that meeting. Okay, they're gonna know what private lending is, what their risks are, what the returns are, right? And you can always compare it to other investments, right? Even the stock market, and put it up against a 401k. I'll take maybe Daniel's lenders. Let's take Daniel's lenders and the returns they get over the course of a year or two, and then compare that with someone's 401k. I'm almost certain that Daniel's investor is going to come out the winner, maybe 2 to 3x. Okay, so we have a lot of value to give them immediately in educating them on the power of investing in real estate as a private lender. Okay, and before I go to the next slide, I want to remind everyone, the reason why we're talking about this, right, is because the market is changing. The economy looks to be already in a recession, and if not, then heading there. So we want to be on the right side of the transformation that's happening. Okay, and the people who are going to be on the right side of this are the ones who understand the fundamentals, and they have the resources to get them through any storm that may come, right? And again, especially if you're flipping houses, or you're doing BRRRRs, right? Or you're developing ground up construction, because there's no cash flow. Okay, so it's hard to keep a business alive without cash flow. So how do we survive? We need investors. We need investors to join us on the journey. Okay, so this brings me to the next concept, which we kind of briefly went over already, is if you feel like you're selling at the table, and this, I believe in this philosophy, not just for, having or raising capital. This, I think, pertains to any industry and any business. And I think that there's a toxic culture out there about selling, about, hard closes, or, like, don't walk from the table until they say yes. Like, to me, like, that's amateur, and I highly suggest that everyone on the call pick up this book by Bob Berg and John David Mann, Go Giver, Sell More. So their first book was The Go-Giver. And that book was one of the books that really spoke to me. And because it's how I think we operate anyways, but they're able to articulate the way we do business in a way that I couldn't. They already figured this out, so, but the premise of this book is that the greatest closers, they don't sell, right? And why is that? Because of this principle, which was kind of coined by Bob Berg, who is one of the co-authors of The Go-Giver. It's the KLT principle. And his famous quote is, all things being equal, people do business with and refer business to people they know, like, and trust, right? I think many of us have heard this quote before. I honestly did not know that, I didn't realize that Bob Berg, the same one person who said this quote, was the one, co-author on all of the Go Giver books. So that was kind of a surprise. But if we understand that, people only do business with others that they know, like, and trust, then our focus, if we're in a sales, if we're in a sales meeting or a sales presentation, or we're trying to get an investor to invest with us, if we know that, if we stick to the KLT principle that people only do business with those they know, like, and trust, then our focus in any sales interaction shouldn't be to sell the product or the service, because that's not what makes people do business with us. Okay, so the real close is when you have gained their trust, you've built the rapport, and you're building the relationship so that you're beginning to know each other. Alex, who's on our team, and we have many guys on our team who are just naturals at this, like they can talk to somebody and immediately have them know, like, and trust them, right? So in any sales interaction, my belief is exactly this. I'm not selling. I don't sell. I'm not a salesman. I don't like selling in the traditional definition of sales. Okay, because I believe in the principles that Bob Berg and John David Mann teach in their books, and it's like, you don't have to sell, because people don't do business with those they don't like, and they don't trust, and they don't know, right? So since we know this, let's be dangerous with this information and change our approach from having to sell somebody to having to give value to them. That we just give value to them. And when we give value, where does it pertain and relate to us? We offer education and opportunity to get into an investment position that is much more secure and pays out higher rate of returns, exponentially more than the traditional investment vehicles out there. Our value is we give opportunity. The second thing is we give education. Okay, we don't sell. We're not selling our business. We're not selling ourselves. We're not selling how good we are, how many deals we've done. None of that. We don't have to pitch anything, because we give value first. So we're going to give education, which leads me to my last slide, which is to remember to know your value, right? And our value is education and opportunity. Now, I've told this story so many times already that it's kind of it's referred to as the auntie down the road story, right? So this is a picture of my real auntie, my Auntie Dana. So this story is based on a real story, but it's not based on my auntie. I just needed a picture of an auntie, and it was my auntie's birthday recently, and I love her. So I figured I'd put a picture of my auntie on there. And but this story is not about her. My auntie was actually very successful, and I love her to death. But this story is about an auntie, and let's say auntie down the road, right? She's living paycheck to paycheck. She feels like she can never get ahead, so she can't even save for retirement. That's many people's aunties and uncles and parents and grandparents, unfortunately. Okay, many people are living paycheck to paycheck. Okay, but auntie might not know that the home that she's living in, that maybe was passed down to her generation to generation, because there's a lot of multi-generational homes here in Hawaii, we all know, right? So she may not know that the house that she's living in, that might be worth $850,000, right? That she owns free and clear. She may not know that she can leverage that property, pull money out, okay, and then invest in real estate. So how does that pertain to us? Well, we have to provide that education to her. Okay, so let's say Auntie down the road comes into the office and is sitting in front of us, and we're just talking to her because it's not a sales conversation. Like, hey, Auntie, how's it going? What's new? How's life? Oh, it's good. It's just paycheck to paycheck, can't get ahead, and so after figuring out, where she's at, clearly with the knowledge that we have, we can educate her and tell her, Auntie, you can go to the bank, go sit down with them and apply for a home equity line of credit to leverage your house. Okay, you can maybe pull up to like 80%, but let's say you pull out like 70% or 75% of your equity. So 850,000 times 75. So she pulls out, let's say, I'll round up because it's 637,500. Let's round up to 640. Okay. Auntie down the road pulls out 640,000 of cash in a form of a HELOC from a bank at 2%. Okay. Now, Auntie down the road, she can now give that money to you, lending it as a private lender, right? With the security, right? Promissory note, mortgage, property insurance, title insurance, with all that security and get paid 12%. Okay, she can make a spread of 10%. Now, 10% of 640,000, right, is $64,000. That's annually. Okay, so now you divide that by 12, right? What is that? That should be easy. Sorry, guys. 1 second.
5,300.
What is it?
5,300 and change.
Thank you. Thanks, Dave. Okay, so Auntie down the road, who is just getting by paycheck to paycheck, is now getting almost instant cash flow of $5,300 per month, right? Or $64,000 a year. That's some people's salary. And that's after taking out the 2% that goes to pay the bank. Okay. Do you think that extra $5,300 per month in profit, cash flow to Auntie, do you think that would help her? Do you think that would change her life? Do you think that would help her get ahead for once, have some breathing room, maybe take a vacation? Absolutely. Okay. It's our job to educate out there, because the real problem we have, especially in Hawaii, is the ignorance of what we do as investors, and we need to change that. And how do we change that? We change that by giving value. We offer the education, right? And we stay the course. We fix neighborhoods, right? We put good people into good investments. In order to get those type of returns, not even with that type of security, usually to get those type of returns, you have to be in the good old boys club or have a net worth over a substantial amount. Okay, most of those funds are closed off to the majority public. They don't offer the 20% returns, 16% returns to average day people like Auntie down the road. You guys know what I'm saying? Okay, Auntie down the road gets to be a retail investor, giving her money, getting charged management fees for that. Okay, only to get a return that is not going to, will never beat inflation. Okay, so we have to know the value that we bring, which is education and opportunity, and talk to people and as frequently as you can and as many people as you can, because people need to know what we do so that they invest with us, because we offer a much stronger investment vehicle. It's a lot less risky and it provides a lot higher returns. Okay, so it's our job out there to go and share and educate so that we can get more investors to invest with us, so we can flip more houses, right? Provide more job opportunities, more business for service providers, right? And clean up neighborhoods and chip away at the supply and demand imbalance that we have in most markets across the nation. So I hope that this brought some sort of value to you guys, because these are core fundamental like principles that we need to follow, especially if you're raising capital. You know, like this may not, I don't know how this is going over, because like I'm on Zoom and I'm sharing screen. So, but when we're out there, I see so many people doing this wrong. Okay, they're selling themselves, they're selling how good they are. People don't care. You know, people do business with those they know, like, and trust. And nobody likes someone that talks about themselves way too much. Okay. If you deliver it graciously and you can do that, then do it. There's nothing wrong about speaking confidently about what you do and passionately about what you do, but don't oversell and don't sell at all, because there's no need to. And you know, I hope everybody picks up that book. It's a great book. The Go Givers Sell More. And in fact, this Go Giver series is going to be a requirement for anybody that comes to work within our companies, because they did all the heavy lifting already. They figured it out. And I'm so glad, because now we can just follow a roadmap. You know, there hasn't been one thing that I disagreed with in these books so far. I thought there was one at first. They're talking about how don't be uncomfortable. What, you know, in a sales interaction, if you feel uncomfortable, then that means you're doing it wrong, or you're already wrong, or in the wrong mindset. So but as you continue reading, they're really saying that it's a sign that you're not being authentic, genuine, and yourself. When you feel like uncomfortable, you know, it's most likely because you feel like you're hiding who you really are. Whereas I was thinking that they were talking about how being uncomfortable is a bad thing. And to me, no, like that's absolutely not. Being uncomfortable is necessary, in my opinion. You know, it's necessary for growth. So, but that's not what they're saying. And these books, I mean, I suggest everyone read it. You know, it's what we try to preach here in our group on these calls. So there you go, Bob Berg. There's a nice plug for you. Tay's got some questions.
Yes, thank you. So I just a couple of things. I guess let's go with the question first. When we talk about liens and lien positions, and that we're going to place a second lien position. For example, most of my deals, I've got hard money in first position, and then second position, we've got a private lender. And we want to provide a second lien position, but we know, I mean, does Kiko allow a second lien position?
No.
Okay, so we want to let them know ahead of time that we're going to be filing the second lien position later, right?
Yeah.
Right.
So
Okay.
the reason why, that's a great question, actually. So this is a very important one. If you're leveraging hard money, okay, and I'll tell you what my LO Spencer used to tell me when I used to get money from him at 5 Arch. I used to tell him, like, Spencer, hey, it's cool if I put seconds on this, right? And he's like, no, we don't allow seconds. Like, you can't do that. I was like, really? I was like, okay, well, because like that's how everybody does it, you know. He's like, I know, but you can't, right? And so I finally had to ask him, I was like, so I can't put second position. I can't have, and he's like, well, we don't allow seconds, but we don't check, is what he said. And so I was like, okay, but so you're saying that I can? And he's like, we don't allow seconds, but we don't check. I was like, gotcha. Loud and clear. Good to go. So the reason why is because since a lot of these notes used to get bought, okay, the they can't sell the note in the secondary market to these private investors on Wall Street if it has a second showing up on the HUD at closing. Yeah, because like and then that's a big lesson for everybody who's leveraging with in first and second is never if you have hard money in first position, never have your gap lenders fund directly into escrow. Okay, I'll say again, never have your investors fund directly into escrow. Now that sounds really weird, right? Like that sounds shady. Well, you don't want them showing up on or sending it directly into escrow because escrow is going to put them on the settlement statement. And then in the final review with your hard money lender, they're going to go through a settlement statement and they're going to say like, who's Kaylee and why did he put 200 grand into escrow? Like we don't know him. Like we need to scrub him too, you know? And then that's a quick way to kill a deal right at the goal 1 yard line, you know? So just remember that. So how do you do that then, right? Because that's risky for your investor. You know, it's safer for them to deposit into escrow. So how do you balance that? Well, when you sign the promissory note and the mortgage and it is notarized and you give them the original wet signature copies, even though those documents are not recorded, it's still fully enforceable. Okay. It's what we refer to as a ghost mortgage. Okay. And it's why we get title insurance, because sometimes there's ghost mortgages floating out there and people come out of the woodworks once they find out that the property was sold and they weren't paid their money that they have a mortgage for. So they come out of the woodworks, they contact the new owner, maybe it's me, and they're like, hey, sir, you sold that house. I had like $100,000 lien from the previous owner on that. Like, you know, like, who do I talk to? It's like, oh, no. Okay, well, go talk to those guys at Old Republic, you know, that's who we got title insurance from. And then they got to go work that out, right? But so we have to, again, educate our investors, especially if it's their first time investing, and let them know that this is how it's going to work. I'm going to draft the documents for your review. Once I draft them, I usually highlight all the critical points in the note, because there's a lot of legalese in these promissory notes and mortgages, right? And you don't want your lender to, or your investor or your partner to be spooked by them. Okay. Like, so I usually highlight the critical components, like the date, the interest rate that we're promising, the maturity date, their names, their mailing addresses, our address, our name. So all those critical components that usually get changed out, because we use like boilerplate templates, right? Once you have a good set of docs, you just use them over and over. Those items, I send it to them. Once I send it to them through email, okay, and that's intentional because you want written track history in case there's any confusion down the road. So you want, you know, the stamps, and so I send them the draft. Might it be even in a Word doc, and then once I get the thumbs up, they send the docs back, or they send the email back to me with the thumbs up. I go and get the docs signed and notarized. Okay, immediately. As soon as they're signed and notarized, I scan the docs, okay, and I email them their copy. And now that mortgage is in full effect. It's binding and it is enforceable. Okay, so now it's when I send them the docs signed and notarized, I also attach our wiring instructions. Okay, and that's when the ball is now in their court to wire, okay, to our account, not escrow, remember? So they're gonna wire to our account, and then we're gonna fund escrow with their funds. Does that make sense to everybody? Because this is very important. Like we've almost lost deals. I've seen people lose deals over this. So, Tay, do you have another question?
No, not really another question. It was more to kind of piggyback on what your presentation was. How sometimes I talk to people who are, thinking of lending, and I think they're so much more focused on the return, and then we educate on the risks. And also, like I guess I have like these standards of who I'm going to do business with, and that I prefer to do business with someone I kind of either align with, or like I can communicate easily with. So sometimes, it's not just someone who's got money and who wants a return. It's also someone that you can just kind of, it's a relationship thing. And I've even not necessarily refused, but I didn't like pursue someone who was like, yeah, I'm ready to lend, but it just didn't feel right. So I didn't pursue it, and I never like bring them in as a lender. So they'll probably match with someone else. But like me personally, I prefer people that I can communicate with. And I'm forgetful. Like sometimes I forget to send out like update pictures and stuff. Like I don't want them to be upset. They just need to be okay with like sending me a text like, hey, I didn't get an update. Do you have one? Like, just, I don't know. It's just such a long-term thing that you just want to be able to, do this right by everyone. And when something comes up, you have to be okay with communicating like, man, we're going to go over the timeline. How's this gonna, so I don't know. It's just to reiterate on that it's a relationship more than like deal, like focus on the relationship more than the deal, because you can just have your repeat lenders after that, which
Well,
is
good
best.
for you, Tay, because like that's not easy to do, is turn down money that's sitting right in front of you, like wanting to give it to you, right? But I truly believe you made the right move, because I didn't before, and we have to remember that trust goes both ways. It's like a partnership. Like just because they're giving you a lot of their money, which I want to speak about too, it doesn't, they're still buying in to a very rare opportunity. There's not many private lending positions open out there. There's not, even though like we'll get like 30, maybe 40, 50 people on the call every Friday. When you compare it nationwide and how many people are being underserved in the financial services industry, how many people have their money just riding the stock market that is being controlled by people who don't really have their best interests at heart. Like when you compare how many there are of us with private lending positions open to the masses, it's rare, so I think you made the right move, Tay. Like not all money is good money. That's the biggest and hardest lesson I had to learn, going through this before, is you don't want to take money from someone who is going to be a problem for you. It'll cost years of your life in stress. Like, so I think you made the right move for sure. But with that said too, you will find investors out there, very wealthy ones, that will not only invest with you, but will be grateful that you're offering, like I tried to pay a lot of my investors back recently, and they don't want to get paid back. And like, to me, it's such an honor, and because when you think about it, if somebody invests with you like 100 grand, 100 grand is a lot of money. That's money that's their personal investment. That's like, it's not easy to make 100 grand. Some people don't make that in 1-2 years, so that's years of work right there. And that's not even counting how much they paid on taxes for that money, so that's there's more to that story. So whenever anyone invests with us, right, they are investing in a rare opportunity, but it should be an honor, because that shows how much you're worth. With how much money people trust you with, that shows how much you're worth. And it also shows how much they trust you, right? And like that should mean more than anything else. And it's a true honor to be able to have a problem where I want to give people's money back and they don't want it back. They want it to be managed because they trust it in my hands, you know. And I hope you guys investor, like, hold yourself to that standard. They are passive investors, so you know, like they like to stay, you know, on the side and not be bothered. But every contact we make with them, whether it's email or an update or a phone call, like, show gratitude, because those are the guys that are going to be, they're going to be driving our businesses, you know, especially if as institutional capital starts to leave our space even more and more. So just I hope you guys got value from that. And if you guys ever need anything, please feel free to reach out. Market's changing, you know, but we'll still be here. You know, like, there's opportunity. That's what I see. But proceed with caution, you know, stick to the fundamentals, don't get crazy. And we'll see you guys next week. Hello, everybody. Chee-hoo.